Welcome to the ICCU Solutions for Life podcast, where we provide insights to help you make confident decisions about your financial future. My name is Nicole Mozurkewich, and I am the marketing director here at ICCU. Today's episode, Home Sweet Home, Navigating Mortgage Loans with ICCU, we're tackling one of the biggest financial milestones in life, buying a home. Whether you're dreaming of your first house, or planning on moving up or moving into the area, understanding mortgage loans and home buying process is key to making that all happen. Joining me today is Dan Timmins, ICCU's experienced mortgage loan manager, who has an extensive background in lending. Around 40 years, Dan?
40 years.
Yes. So welcome to the podcast.
Thank you very much, Nicole. I'm thrilled to be here. Helping people achieve the dream of home ownership is one of my most rewarding parts of my job. And I'm excited to share tips and ideas with the listeners today.
That's awesome. So let's talk about your background, 40 years in
40
lending.
years,
so
yes.
Can you share a little bit about how you got
Sure.
there?
I started out, after I graduated from college, I started out with a savings and loan industry down out of the Detroit area. And I spent 5 years with them, and I moved on to Independent Bank. And then I spent 24 years running the Clare office for First Bank, which is now Mercantile Bank. And then I was lucky enough to come and run the mortgage department as Isabella Community Credit Union.
Yeah, so, and you've been with us a couple of years now?
Couple years
yes. now, yeah. Yep. You came, I think, shortly after I got here. Yes. So, great story. It is so good to have you. So throughout the episode, we'll unpack the mortgage process. We're going to offer tips and advice on first-time home buyers and answer some common questions. So to kick things off, let's break down the foundation of what mortgage loans are and how they work. This is the first step in understanding that journey of home ownership. So Dan, what exactly is a mortgage loan and how do those work?
Well, basically, anytime you want to purchase some type of real estate, whether it be vacant land, a house on 10 acres, a house in a subdivision, you want a mortgage loan. And a mortgage is what we have you sign at closing that secures and puts a lien on that property. We file it in the county. So that is actually what a mortgage is. If you compare that to like a car loan, when you come in and do a car loan, you get typically the lender, ICCU, would put their name on the title. So in this case, we use a mortgage, secure it, record it with the county, and it's on public record.
Okay, that's great. So there are so many types of mortgages out there. Can you explain the difference between a fixed rate, adjustable rate, and a balloon mortgage?
Sure. Most everybody that wants to get a mortgage really wants to get a fixed rate. That's the best loan you can get. We offer 3 different types of fixed rates, the 15-year fixed, the 20-year fixed, and the 30-year fixed. Okay. Not that you couldn't pick any term you want, it's just that's kind of the rate breaks. So that's a fixed rate conventional. And then there's also, for those, some people would like an adjustable if they're only going to own a house for maybe a couple years, and they can get a really low rate to start with. The nice thing about adjustable rates is they start you out at, I call like a teaser rate, a lower rate, but they have caps on there that protect you from going more than 2% a year and then 6% over the life, so it'll never get up too high. So if rates stay down, an adjustable could be a good way to go. But again, conservatively, fixed rates are the best. Balloon mortgages are for those mortgages that we can't do fixed rate for or adjustables that we want to keep in-house. Maybe there's a unique feature to it that doesn't qualify for regular financing, and the balloon mortgage will help us get that loan done for you. The disadvantage of a balloon, obviously, is that your rate's only fixed for 5 or 10 years, but as long as you're making your payments as normal and on time, we're going to renew that balloon for another 5 to 10 years. It's just going to allow us to adjust that rate to protect our rate risk. So the worst case scenario would be the rate could go up and you're going to get a higher rate.
Mm-hmm. When that balloon
comes due
to maturity.
But it's still it's a way for people to get maybe some unique financing that someone else won't do for them that we can do for them, vacant land loan, something like that. So it's a good product, but just...
So what about specialized loans? There's FHA, VA, and rural development.
Yes. Those are all good loans. They're especially good loans for first-time home buyers, low-income buyers. Basically starting with VA is for veterans. Mm-hmm. If veterans have their certificate of eligibility, what's called the DD-214, mm-hmm. they can get up to 100% financing. So if they find a house for $100,000, they can literally borrow $100,000 on that house. Next is FHA. FHA is for everybody, not just a veteran. and they allow you to go as little as 3.5% down. So for someone that doesn't have maybe 5% down for a conventional loan, doesn't have any money saved, they can do it a gift for the entire down payment. FHA is a good option for them. And then the last one is rural development. And rural development is a 100% financing, but you have to be in a rural area. So the city of Mount Pleasant would not qualify for rural development, but outside Mount Pleasant, it could. You have to meet the income limits, so it's meant for low income borrowers. But that is a good option for you too. So those are those 3 programs that are available outside your typical conventional loans.
Now, do we offer the FHA, VA, or the rural development loans?
We work with what I call a partner with that. We don't specifically offer them, but we can facilitate that for you and help you get with these people and help you make sure that everything goes the way it needs to help you get that finance.
So we have a member that is looking for a loan, but they don't qualify for our fixed rate. That's something they can come and still talk to our lending department and get that information and help them out.
We'd be happy to help them with that.
That's awesome. So home buyers often hear terms like principal, interest, down payments, escrow. Let's define a few of those terms for those borrowers.
Sure. Principal and interest, basically, when you do a mortgage, your normal payment is going to have principal and interest. When you do a 30-year mortgage, you're going to have a lot of interest. I printed out an example just so you know that if we just closed a loan, it was $190,400, and it's a 30-year fixed. And if they made all 360 payments, they would pay back $453,578.38, which is a lot of interest. So, but that makes up your loan. Now, also we have what's called a total payment, is what we call principal, interest, taxes, and insurance, PITI. And what we do with that is that's for those people that are going to escrow. And what an escrow account is a special account we set up to put in there for your future taxes and your future insurance. So anyone with less than 20% down, we don't have a choice. We have to escrow for tax and insurance. If you have 20% down or more, you can choose to pay your own taxes and insurance. The advantage of an escrow account is rather than come up with $1,200 for your winter taxes in December, we're going to collect $100 a month for 12 months and have that $1,200 in there for you. Of course, the negative part about an escrow account is that when you close on a loan, we have to pre-fund that to have money in there so we can pay those taxes and insurance. So you come up with more for closing, but you don't have to come up for that in July and December and whenever your insurance is due. So that
kind of like a little layaway for your taxes and insurance.
So as far as the next one you mentioned was down payment, the more you have down, the more options you have. If you don't have any money to work with and you don't qualify for rural development, then you're going to need to save some money and come up with some money to save and for your down payment. If you have 20% down or more, all options are available. Conventional loans, if it's a unique home, we can still do balloon loans, things like that. So the more down you have, the more options you have. The less down you have, you're going to have to go with some type of either government program or the next one you mentioned was PMI. PMI is what we call private mortgage insurance. Anybody that has less than 20% down has to have that. Just like you get car insurance, life insurance, private mortgage insurance is a monthly premium you pay to be able to do a low down payment loan. The nice thing about PMI, which is different than FHA and VA and stuff like that, is PMI, after you build up enough equity, say 78%, and you're making your payments on time, automatically was off. FHA, that PMI is on there for life.
For life.
So that's one of the advantages of conventional.
Well, those are some great definitions and explaining things to our listeners. So, let's talk about how to prepare financially for that big step. Buying a home is a huge, huge financial milestone. But that financial readiness is key, right?
It is.
And so what should potential buyers focus on before they even start house hunting?
Before they even start house hunting, they should, number one, focus on developing credit. Credit is one of the most important things when you come to get a loan. It's very difficult if you have negative credit, and it's hard if you have no credit at all. Mm-hmm. So I would advise you, you can come in here to see us and set up a personal loan and build credit. You can buy credit or get credit cards and things like that. Don't not be responsible with your credit cards, but borrow, pay back, build up some credit, get a good credit score, and that can help you help you to better get a good mortgage loan. Along with that, start saving for a down payment. The more money you have, even some money is going to be better if you can come up with at least 5% down. You can always get gifts for the rest of the money from a parent or relative, and I can explain more about that when they come and talk to us. But so that is an option for them too, is build up your credit, save money for down payment. And then one of the other main keys is stable employment. We want to see someone who has at least a 2-year job history. We prefer it to be in the same line of work, but if you've just started a job and or you've been off work for a while, it makes it very difficult. We really have to have stable income. We're looking at doing a 30-year mortgage commitment, and we want to know that we're not putting you in a position that you can't make that payment. Mm-hmm. So the best thing I would recommend out of all of this leads to what I call a pre-qualification. We really would advise you to see a local lender, preferably Isabella Community Credit Union, and we'd love to be able to talk to you and sit down and help you pre-qualify for that loan. If you're not pre-qualified, you really don't know what you can afford. You really don't know what you should be shopping for and what's all entailed. And it doesn't cost you anything to come in and sit down and ask questions and us run you through that process. And when you go to make an offer on a house, the realtors are going to want a pre-qualification letter. They're going to know that you're serious about this and that you qualify for it. Okay. So that is very important to do.
So how can those buyers figure out, what they can realistically afford in a home?
I like to use for housing, what I call the 25 to 28% debt to income ratio. And for overall debt to income ratio, 33 to 36%. That doesn't mean we can't go a little bit higher than that. That's just a conservative. I've been doing this for a long time, so that was the old school way of doing it. But what that means, and I keep numbers really simple, if you made $12,000 a year, $1,000 a month, everything comes down to monthly income. If you take that $1,000 and you take 25% or 28% of that, you can afford a house payment, principal and interest, tax and insurance for $250 to $280. Make $2,000, it's going to be $500 and $560. And then your overall debt ratio, which is just as important, is no more typically than 33 to 36%. Now there are cases they'll go up to 40% with good credit, which is why it's so important, and other things like that. But if you use those as a guideline, that'll really help you. And if you think about that 36%, if I have a $300 car payment, I've already used up 30%. I don't have room for a good house payment. So you want to make sure that you use that calculation. Whatever your income is, and I'll give you a real quick examples. If you're an hourly, you take your hourly rate times your 40 hours, times 52 weeks, divide by 12, you get a monthly income, take 25, 28% of that, that's a house payment you can afford.
That really, I think, will help a lot of people understand the details of that, because going into it, it's so hard to judge because houses are so expensive. Can I really afford that?
And you got to take into consideration not only principal and interest, but taxes and insurance.
Right. So let's talk a little bit about those additional costs of buying a home. Right.
Sure.
It's not just coming in and buying a $100,000 home. There are other things that factor in there.
Number one, you got your down payment. So if you're putting 20% down on a $100,000 house, you got $20,000. Your typical closing costs, depending, are going to run you, again, on the loan amount, depends, but $2,000 to $3,000 just for closing costs. Mm-hmm. We charge a $695 processing fee that's included in that. That's the only fee we charge, and as far as I know, that's about the lowest there is in the area. But then you've got a lot of other things like appraisals and title work and credit reports and all those things. The other thing that you have to have is what we call prepaid items. And that's a year's worth of insurance up front. So again, if your insurance policy is $1,200, you got to pay for that up front. Yep. And then you've got to put so much money in for future taxes and insurance. So I always like to say, allow for at least $2,000 to $3,000 for prepaid items. So if you take somewhere between $5,000 and $6,000 for closing costs and prepaids, that's a lot of money.
In addition to your $20,000,
or $5,000 if you're only putting 5% down, and then you've got PMI and stuff.
Yep.
So one of the things that's also helpful to know is you can ask the seller to contribute up to 3% on a 5% down deal, and more than that on a 10% down or 20% down deal, but 3% of their purchase price towards closing costs. So on a $100,000 deal, they could pay $3,000 towards your closing costs if they agree to do it. But you can always ask.
Yeah, I mean,
and that would help you with some of your costs.
Yeah. So can you walk us through that pre-approval process? I know you said sit down with you guys,
Sure.
give us a phone
Yeah,
call.
we like to have you sit down, bring in your pay stubs, bring in your bank statements, bring in everything that we need to look at so that we can figure out, okay, what is your gross monthly income, and figure out a payment for you so that we can see what you've got to work with for savings and what you need to get to and stuff like that. And to actually pull up a credit report, look at your credit, do all that, and get a full-blown pre-approval so that you have confidence that you can go out there and make an offer on a house.
Nice. So financial preparation is so important. But now let's move into the fun part, finding the home, right? So can you walk us through that home buying process, share some insights of the role of like a real estate agent and tips for house hunting?
Sure. I think one of the most important things is you find a realtor that you trust. Ask friends, ask us, ask anybody, but find somebody that is going to go to work for you. They're professionals. This is what they do. They know what they're doing. They can help you fill that purchase agreement out. They can answer your questions. That's what they do for a living.
Right.
So find somebody that you're comfortable with. If you happen to find a house that's for sale by an owner, you can come and ask us questions. If you're not using a realtor, you can work with the title company, ask them questions. And you can even hire an attorney if you need to ask questions. So there's different ways, but the best thing I'd recommend is working with professionals. I mean, we do this every day, so we're familiar with it. Realtors do this every day,
Right.
And so we're here to help.
So then what should a buyer expect during the home inspection and appraisal process? That's part of that in there too.
You really want to, unless you're blessed to have an engineer in your family or a builder or something, you really should get a home inspection. You know, I'm not an expert on that, and I don't want to crawl up into the attic, and I don't want to look at the plumbing and all the electrical and stuff like that. But you know, if you buy the wrong house with a lot of stuff that needs repairs, you're going to have additional costs. So hiring a home inspector for the cost that it is a great idea, and I'm sure your realtor would probably recommend that. As far as the appraisal goes, we need to do an appraisal. We have to make sure that you're not paying too much for a house, that the value's there.
Right.
And so when we do the appraisal, the appraiser's job is to justify that sales price. So he's going to go out and hopefully the appraisal is going to come in at or around the purchase price. If he can't come up with the value and he comes up with less, then unfortunately we're going to have to take the lower of the two. And you're going to have 20% down on that, so that's going to make a difference. You're going to have to decide if you want to pay for a house that appraised for less. If it comes up for more, well, then you're getting a good buy, and you got a little bit of equity there maybe when you're starting out.
Well, good. So once a buyer finds that home, what's that next step? How do they go about making an offer?
Well, there again, that's why you want to work with your realtor. You want to make an offer. They'll run that or go through that purchase agreement with you. You know, detail all the things you need to sign and know and be aware of. What price should you offer? They'll help you with that. They're going to request that you put something down, like an earnest deposit. They want to know that your offer is serious, so they may request anywhere from $1,000 or more as a down. It's not a down payment. It's called an earnest deposit, and that'll get credited to you at closing. Then, okay. So
that closing process can feel overwhelming.
It can be very overwhelming.
What happens on closing day?
Well, closing day, I warn you right now, I've seen mortgage packages that are 100 pages, and I've seen them over 140.
That does sound overwhelming.
Depending on, if they're government loans, they're typically a lot more papers to sign. The good news is that they're pretty standard forms. Your lender, anybody at ICCU, will be happy to sit down and go over them with you. We try to attend most all of our closings to answer questions for you. We close all these deals at the title company. The title company has professionals that do the closings, and they can answer all your questions. So the main thing is just not to be overwhelmed. We're gonna give you up front the amount you need to bring in a couple of days before closing. If you have any questions specifically, we're happy to go through all of that with you. So it does seem a little overwhelming, but it's also a pretty special day because now your dream of becoming a homeowner is happening.
Right there.
Yeah.
So of all your years of experience, do you have a favorite story of a home buying experience, or how these members navigated that process with you?
Sure. I actually have a lot of really good stories, but
I bet you do.
I'm gonna do something a little bit different and not mean so specific on an exact story. Probably my favorite ones are the people that come in, and this is what I recommend people coming in, And you don't want to ever tell anybody no. And I try not to tell them no, but I tell them what they need to do in order to buy a house. So if they don't have any credit, I help them to build that credit. If they don't have a down payment, I teach them how to help them to start saving money and this type of stuff. So we want to help you get ready. So when you say, is there any success stories? Got lots of those, but the ones I like the best are the ones where we couldn't help you today, but we want to be able to help you tomorrow. And that's what we want to do here at ICCU.
Well, good. So we've kind of covered the process. We've talked a little bit about what those days look like when you're buying a home. So let's shift gears a little bit and talk about things for first-time buyers.
Okay.
First-time home buyers have a lot to navigate.
Sure.
You've brought a lot of great information, but I know there's other great resources and advice to make that journey a little bit smoother. So I have a relative. He's around 20 years old and looking to move out of his parents' house. And what advice would you give those 18 to 25-year-olds that are looking to make that next step?
I would advise them, number one, to start right now. Start as young as you can. Get that credit going. Get that down payment saved. Get that stable job so that when you come in, you're ready to do that. And renting is good because that can serve as a credit reference for you.
Okay.
So that is good. Get any of your bills in your name, like electrical. If we have no credit, we can still come up with what we call non-traditional credit references.
Okay.
Like a letter from your consumer's power maybe, or some documentation that you're paying your consumer's bill. A letter from your insurance agent that you pay your insurance every month. So we want credit scores because that affects your rates and stuff like that. But my best advice is the sooner you start, the sooner you can purchase a house. And we're here to help you do that.
Yeah. So how should these buyers think long-term considerations like resale value, neighborhoods?
Sure, exactly. When you buy a house, it's one of your biggest investments you're ever going to have. It's the biggest loan you're probably ever going to have. And a house over time normally appreciates in value. So you want to buy a house that you feel is in a good neighborhood, it's going to appreciate in value. I don't want to tell people to strictly stay away from things like manufactured homes or mobile homes, but they do tend to depreciate more. They're harder to get financing. There's different costs associated with them. So find a house that's going to be a lifetime investment for you, one that's like I said, in a good area, and that is hopefully going to improve in value. That's well constructed. That's why that home inspection is so important and stuff like that.
Right.
Because it is a big investment, and hopefully, 10 years down the road, you're going to have a lot of equity in that thing, and it's going to appreciate it, and it's going to be great. Maybe you can get your second house. It's going to be a little bigger and nicer.
So the down payment's key, right? What kind of insights do you have for a cash deposit versus savings? And
you don't ever want to do cash. Cash is, unfortunately, we can't document. So one of the things about a mortgage loan that everybody needs to know is that we have to document everything. There's so many different government regulations and requirements. We want to show we're not discriminating against other people. So we have to dot all the I's and cross all the T's, and we have to show where that deposit comes from. So if all of a sudden $10,000 appears in your account and you say, well, I put it in there in cash, we can't use that. We have to document where it came from. So if you have money in cash, put it in now, long before, and let it sit there, earn interest, it's insured, and then all we have to show is it's been in there for at least the last couple of months, been in your bank statements. It's not something that just was deposited, and then we can use that money. Also, if you're going to sell an asset or something like that, like you're planning on selling a camper and you're going to use that as your down payment, we need a paper trail.
Gotcha.
Get a bill of sale, get a copy of the check, signing off on the title, so we see where those funds came from. Everything has to be documented.
Those are great, valuable insights. So it's evident that ICCU is dedicated to supporting first-time home buyers and members looking for, home, and us helping them every step of the way. So let's go ahead and, highlight some specific resources, services that ICCU helps and offers to our members to achieve these, home ownership goals. So can you tell us about the products and services that ICCU offers?
Sure. We offer, number one is we offer your typical conventional loans, 15, 20, and 30-year fixed-rate mortgages. For those that don't qualify for those, we have balloon financing and some short-term fixed-rate financing on those. And when I say a unique situation, if you've got 40 acres with a small home on it and the value's mostly in the land, that's something we can help you with, but it's not something you can get a 30-year fixed on.
Right.
So we have those products available. We also offer manufactured home financing, vacant land financing, barn dominium financing. We have home equity loans for people that want to tap into the equity they have in their house, but they don't want to touch those low rates that they've got right now.
Yeah.
Leave those alone and take out a home equity. In fact, we have a zero cost home equity program that's been very effective for us this year because of that. We have also a home equity line of credit. Outside of my department, we have our consumer lending department that can help you maybe get a personal loan to start building that credit, or get that first credit card for you to help build that credit. You want to try to have more than just one loan. The more loans, as long as you manage them correctly, the better off you are. If you could have a credit card and a personal loan, then it's going to give you 2 references on your credit report and help you build that credit report faster.
Nice. So what makes ICCU's mortgage services stand out from ours?
I think the biggest thing is that we're here for our members. We want to provide them with the best service possible. We have a long history between the 3 people that are lenders have over 60-some years of experience.
Yes.
They've been doing this for a long time, and that's our goal. We really want to see you get the house of your dream. So we're here to try to help you.
That's great. So it's clear ICCU is a great partner for anyone looking to buy a home. Let's wrap up with a quick summary of what we've covered today. Understanding mortgage loans. Your wealth of knowledge really explained what those are and how people can access those. We broke down the basics of how those mortgages work and explored those different types of loans. Preparing financially sounds like that's one of the things that young people can start doing, really working on their credit scores, savings, and getting that pre-approval when it is time to look to buy a house. The home buying process, Dan, you offered advice on finding an agent to the closing day, and I love that we can help our members every step of the way, not just say, sorry, we can't help you today, but really give them some good referrals. First-time buyer tips, great advice, emphasizing what those first-time buyers should be looking at when they start that journey. To sitting down, come talk to us, sit down with our lending department. We would love to help you. And then the ICCU resources, 60 years of experience in our department is a lot. So that means you've seen a variety of different cases and scenarios, and I'm sure you guys have already, figured out how to maneuver and help those people out. And I love that we're dedicated to making that home buying process simple, stress-free, as much as stress-free as possible, and then tailored to their unique needs. So whether you're a first-time home buyer relocating to the area or looking to refinance, ICCU is here to guide you every step of the way with personalized support and expertise. Dan, thank you for joining me today and sharing your wealth of expertise, practical advice, and valuable insights. You've provided so much great information to our listeners, and I bet that they're going to feel pretty confident in coming in and talking to us as they navigate that journey. So we appreciate your time and knowledge. We hope you enjoyed today's episode and found it helpful. If you're looking for additional resources or have questions, please feel free to visit us at ICCUonline.com, reach out to anyone in our mortgage department, or visit our social media channels. We do post a lot of things on our blog as well, so those are some good resources for you. Thank you for listening, and remember, at ICCU, we're here to be your trusted financial partner every step of the way.